Welcome to the Private Lenders Podcast with your hosts from Hard Money Bankers, Jason Balin and Chris Haddon. This podcast is sponsored by hardmoneymastermind.com.
Hey everyone, thanks for checking out the Private Lenders Podcast. We do appreciate it. Real quick before we dive in here, if you've been thinking about working with us offline, either one-on-one or coming to one of the events, you should speak to Dave Bauer about it. Just go to hardmoneymastermind.com, click on consulting, and schedule a time to talk to Dave about everything we have going on offline and in person. Okay, this is gonna be a fun story. We're talking many years ago now. We've been at this for a while. So we closed our first loan. HMB's first loan closed in December of 2007. Jason had already gone full-time into the business. I was still working for SunTrust Bank doing mortgage loans and transitioning in. It was a couple months before I quit and went full-time in HMB. And shortly after our first loan closing, it was the holidays right there. And then we were on a plane to Vegas in January of 2008 to go to our first ever Hard Money Conference.
Yeah, so our first Hard Money Conference was a PITBAL Mortgage Conference, PITBAL Mortgage School, Leonard Rosen, shout out. And it was... it was interesting, and I think both of us will have some takeaways from that event. And obviously, we're big advocates of, going to events, networking, meeting people at events, potentially even getting private coaching, consulting, or mastermind, or working with folks through that platform. I think there's no better way to learn and expand than education. And one of the reasons we went to that event is they didn't have much education in the hard money lending space back then.
No, that was the only one at the time.
Yeah. It was the only one. And Leonard had come from, the mortgage business, the regular conventional mortgage business, and doing mortgage coaching and mortgage teaching, and transitioned into the hard money space. And, there wasn't much capital available at that time. There wasn't institutional lenders back then either. So it was interesting. And I do vaguely recall one thing where we went to this event and was like, dang, we're ahead of the curve after a year, right? We're ahead of the curve on this, which is a good thing. But it was also interesting that everybody had different kind of business models, which is still true today of what they wanted to do, right? Some people had their own money. They wanted to deploy it responsibly. Some people didn't have any money and they wanted to either create a fund or do direct placement. Some people were lending on primary residences back then, because back in the day, lending on primary residence through Section 32? Is that the right term? Section 32 loans, high cost loans, rates, they used to have, 3-day right of rescission periods. Back then, the hard money product for primary residence was something called a 228. So it was a 30-year loan, but, it was locked in for 2 years and it could adjust after that. I remember all of those things that occurred back then. But, fast forward to today, there was relationships that we made there that people that we still talk to.
Yeah, I mean, more about some of the lending stuff. So a little more context on what was going on at the time. I know a lot of people have heard our startup story, and here's some more details specifically related to this trip. So we had closed the first loan, like I said. We had done in the previous 2 or 3 years, we had done a handful of real estate deals, real estate investment deals, wholesales, flips, maybe we owned a rental at the time, something like that. And so and with the mortgage lending background, we kind of knew, for being mid-20s, we knew what we were doing, kind of, right? Definitely enough to get started. It was a really weird time in the market because this was basically during the financial crash and real estate crash. And foreclosures were popping off. There's very little liquidity in the market. There were lenders around. We had met a handful of DC area and Baltimore area lenders who were struggling a lot because they got too aggressive during the boom. They're giving high leverage. They're being too lenient on borrower underwriting. And a lot of people were struggling. And a number of them disappeared from the industry and a number of them came back. A number of them recovered. They took back properties. They did what they had to do. They got their capital straight, maybe re-raised capital and came back in the game. So just a little more context on what was going on in the industry at the time. And yeah, like Jason was saying, it was in Vegas. So there's a lot of California lenders there. And they do business differently now, and they did business differently back then. A lot of it has to do with laws. So a lot of the Western states follow California laws, like Nevada, Arizona, maybe some other ones, probably Washington State, Oregon. A lot of them follow California laws. And in our case, that means licensing. A lot of them have consumer lending licenses, which doesn't apply to the majority of states. For that reason, they were legally able to do primary residence loans. And we got out there and they were talking about during this one full day conference, I think there was like a cocktail party the night before, and then one full day, like 8 to 5 conference. And a number of the examples that they were talking about, sample deals, were primary residence loans. And us from the East Coast, we were like, why are you doing that? Like, didn't make sense. Anyway, that's a little aside, but we made some connections there. We met some people who we still know to this day. So like one was Leonard Rosen, who started that conference, the PITBAL Mortgage. And then later on, I think more recently, it's been taken over by his son. There have been some other spinoffs. Like that PITBAL show turned into NPLA, National Private Lenders Association, and their conference. And then there's another one called the American Lending Conference that I think is run by Leonard Rosen, the PITBAL, his son. And then Gerasi runs some shows. And that's another person who we met. That conference was Anthony Gerasi, the founder of that firm, who's known across the whole industry because they're one of the dominant law firms in terms of legal work, funds, licensing. Also, they own Lightning Docs. A lot of people are doing docs through them. We met him then. Who else?
I mean, AJ, if you said AJ from TMO, that was the first time we ever met AJ.
Oh, AJ Poulin from the mortgage office, yep.
PrivateLenderLaw.com, which wasn't Private Lender Law. He was just an attorney. Keep in mind, they didn't have vendors and, service providers like they do today. As soon as the institutional capital came into place 10, 12 years ago, all of a sudden it was turned into a much larger marketplace than it was back in the day. So back then it was, hey, I'm an attorney, let's use Anthony or John, either one. I'm an attorney and I concentrate on this for private lenders, and I'm a 1-2-man shop. And then institutions come in and there's lots and lots of capital available, and there's lots and lots of players in the space, and they expand tremendously. A lot of TMO original lenders were regular mortgage companies, not necessarily hard money companies, or they concentrate on primary residence loans. So one other note related to why we never did the primary residence stuff, it was kind of during the times that, licensing started. So potentially we could have done them or not. We chose not to, not because the licensing side of it. We chose not to it because we didn't want to be in the consumer lending business and the emotional lending business.
Yeah, we didn't want to be B2C.
Yeah, we want to be the B2B, the business to business lending. I mean, I've done consumer loans in the past. Chris has done consumer loans in the past through banks and other lending companies. And that's not that fun, right? So, also, if you're doing hard money and I've been involved in a firm in the past years ago where pre-hard money bankers, where we did hard money loans for consumers, for primary residences. And they, if there was a license back then, they obviously had it because they're a big lender. But the goal was, cool, you do this 228 product for this homeowner with the hopes that you can help them refinance as their credit improves to a long-term loan, right? So it's like a bridge, short-term opportunity. That's not the business model we're all in. When we talk about the 4 C's of underwriting, like an exit strategy, capacity and exit strategy is so freaking important. Like you can't write a loan to somebody who can't get out of your loan, right? So consumers are hard to do this. These are business-to-business loans. Fix and flip, the exit strategy is reselling the property, right? Fix and hold, the exit strategies, they're going to be able to refinance because they have good credit. With a DSCR lender, the borrower doesn't have good credit, you can't do a loan for them right now, unfortunately, because they won't have an exit strategy.
Yeah, I mean, there are a number of takeaways from that full day. Just being around the industry, we were so new into private lending, and we were all in. We had already decided that was the model that we were going all into, and it had to be that way. In order to start something up at that time, we didn't have a full-time job. I mean, I did, but I was just about to quit, and I did shortly after that conference. but just dove completely into, we have to lend, we have to bring revenue in this month, next month, every month. We got bills to pay. We were all in, right? And that's why even during a super difficult time like the financial crash, the Great Recession as it's called, we were able to put it together because we were dedicated. It was the only game plan at the time. I also remember, well, a couple things. You might want to jump in with some more parts of the story, but one thing I distinctly remember is we were flying back on the plane. We were there a few days. I forget where it was. It was at Caesars or one of the go-to places. We stayed in it could have been Caesars for sure. We stayed in the hotel where the conference was happening, and we, Vegas in your 20s is a good time. We probably stayed there a couple days and did some gambling, went out, had fun. It was cool. And I do remember the plane ride back because that's when we had the conversation and decided that we were going to split up the company between Jason running the front end of origination and underwriting and all of that. And I was going to run the back end of raising capital, doing investor relations, and managing like the portfolio and the accounting. That's when we decided, literally on the plane back from Vegas. It was a really good move. Before that, things were a little bit jumbled. We were just trying to figure out who was doing what. Like we were both originating. Remember? Like we would both run leads, and then we would both talk to capital investors depending on who was working that deal. And it was clunky, right? Like we hadn't ironed it out. It was our first, like we closed our first loan in December, but we probably started working leads in the summer, just trying to figure out what the hell we were doing. We didn't know if we were going to be a broker shop, doing commercial loans, residential. Like we did settle into what our niche was going to be. And then later on, it expanded out to other stuff. But like for the first handful of months, we were just kind of messing around and figuring it out.
Yeah, and it was based on kind of who knew who relationship-wise. We did 16 loans our first year. And I remember some of our investors, like I knew them. They came in from somebody or whatever, maybe I had a better relationship with them or vice versa. And then they would just call me because like they didn't know who to call, right? It was like, hey, Jason and Chris, just call one of them type of situation. And I remember talking to one of them about questions about a particular deal. And then on the other side, like a borrower, you meet a borrower and they call you, right? Like it would just go back and forth. Like there was definitely some disorganization, just like any, original company would, nothing obviously wrong with that. But I agreed. Like it took about a year to realize it's like, hey, let's have defined roles and, let's put some organization and some systems in play with this. And again, the reason why I think we encourage going to live events, networking with other lenders of what they're doing, is you just don't know. Like you have in your head a way that this business should be run, and until you're told differently or until you get stung, you don't know if that's right or wrong, right? Like we were talking to another lender in the Mastermind group recently, who had just closed a loan last month, and then he's like, oh yeah, the first payment's due, whatever, a certain date in this upcoming month. And we're like, wait, why did you do it like that? Because that's 30 days after the close date. And he was like, yeah. And I was like, well, technically the best way to do it is, push that out to the following month. So let's say, you close the loan in the month of August, your first payment would be due October 1st, right? So August, let's say it's August 20th, you have 10 days of per diem interest that you collect on the HUD. You skip the month of November, and then October 1st, October 1st is the first monthly payment, which covers September 1st to September 30th's interest, because interest is paid in arrears, just like a regular mortgage loan. And that's how a normal mortgage company would do it as well. That being said, nothing wrong with having that thought in your head of, hey, I closed the loan today, let's say August 20th, and the first payment's due September 20th. Logically, that does make sense to do it that way, right? And a car loan might be done that way.
Yeah, but logistically, it's no good.
Yeah, but then imagine if you have 30 loans and you close all of them at different days of the month. Every month you're collecting new payments. It'll turn into a logistical nightmare. So there's definitely things along the way that as you grow and scale, you realize this doesn't make the most sense. So long story short, I'm glad we went to that event. I thought it was a good one. We've definitely slacked on some of the other events that we've been to, over the last, 5 or 8 years. We were pretty event heavy early on. Yeah, some stuff in the lending space because there wasn't much in the lending space. And then we reached out and we did a lot of business building stuff, marketing stuff, wealth building things, events and things like that. And one of the reasons we started the Mastermind group and doing live events is to bring like-minded lenders that we can all learn from together into one space, because there's so many different things, and you need help and experience from other people that have gone through that or are going through that. And it's turned out to be a beautiful thing. And we could have used help early on, and the only people that we could really reach out to were kind of like rich older people that had some of their own money deployed, and like they weren't even running hard money lending operations. They were just kind of doing private lending. So we were able to one-off. So we were able to learn a little bit, but not as much as we could have.
Yeah, I mean, 10 years or so ago, when the industry primarily shifted to institutional capital, the events grew, but also went in that direction. So there's a couple things to this. Once it became like all about how people are finding capital through Wall Street and institutional sources, underwriting through third parties that, we don't totally agree with. We've hammered that home enough. And everyone just kind of turned from, instead of being an investment vehicle, they turned into mortgage companies, just focus on investment property loans. We were a little bit turned off by those conferences. Like we didn't have much of a reason. That's not our business model. We didn't have much of a reason to go to those, right? It just didn't apply to how we were running a lending company. And then balance sheet lenders like us kind of became the minority of the industry. And that's okay, but there's still a lot of us. You can tell by the Mastermind and how it's grown and everything else. And if there were an offline Mastermind event similar to how we joined Russell Brunson's for marketing and business growth and everything else, if there were one of those for private lending, we would have joined it, but there wasn't. So we created it first with the online group around 2019, and that's since grown into the offline group too, and the consulting we do. Because the growth of the Mastermind has shown that the industry needed it. There are balance sheet lenders like us, whether you're raising capital or just lending your own, that want to learn from each other, that want to learn systems, best practices. How do you run a company? How do you grow a company? What are the things to avoid? How can we make sure each other as lending companies don't lose money? Like all the important stuff that goes into our business model is exactly what you learn and really, really shortcut the learning curve. Like one member said, joining a Mastermind group, it's a cheat code. It's a cheat code. You can take 5 years off the learning curve in a week just by hanging out with people who've already been there. So that's why we're so adamant about this group. And we really like to share the stories of everyone and how it's helped people. It did start with that janky PITBAL conference back in 2008. And that is awesome. And, the industry has evolved a lot. So have we as lenders and as business people and everything else. And of course, the Mastermind came right behind that. So if you haven't done so already, go check out hardmoneymastermind.com, everyone, and we'll see you here next time on the podcast.
We hope you enjoyed this episode of the Private Lenders Podcast. Please note that the opinions stated by all the speakers on this show are only opinions and not intended for legal, financial, or accounting advice. Please make sure to always check with your own legal, accounting, and financial professionals. If you enjoyed this episode of the Private Lenders Podcast, we'd appreciate it if you would spread the word. Make sure to check out hardmoneymastermind.com, the #1 free community for new and experienced private and hard money lenders.